Hey guys, it's Willie. Today I want to take a look at Walmart stock, currently 118.29. You're seeing down year to date 18%. Walmart's a massive company. Really not the kind of companies that I like to look at, simply because Walmart is one of those giant companies that has practically no growth left in it. There's going to be some. I think it's going to mostly be inflationary. Walmart's got stores everywhere. But why am I looking at Walmart particularly? Well, there's been a lot of discussion about a recession. Walmart, as I will point you guys to this article, wonderful article, talking about Walmart versus the S&P 500. And I think there's supposed to be charts in here, but for some reason they won't load. The ads load, but the charts won't. That's strange. Anyway, so this is one kind of line I want to hit here. 1 year in which the company did not outperform a bear market was in 2000. So you had the tech bubble happen, and it did not outperform in a bear market. Every other year since it went public, it outperformed in a bear market. So essentially this article keeps going through and showing and saying, hey, this company is really good in a bear market. Really good in a bear market. Really good in a bear market. And that's all they basically say, the exact same thing for every single one of these little blurbs. But my point is that Walmart is a really great company during a recession, and with a recession looming, as a lot of people seem to think. I seem to kind of go along with that idea. It's time to really start looking at Walmart as a possible buy. So here we are in the spreadsheet. Revenue, net income, free cash flow, kind of where we always start. Revenue is growing at 2% a year. Net income and free cash flow, not really doing a whole lot of anything. I expected to see some growth out of it, in line with revenue, but we haven't seen that growth in line with revenue. I don't entirely know why, but I think overall, you're going to see that trend. You're going revenue at 2%. I think Walmart's going to continue to grow net income and free cash flow. I think it'll end up, kind of along that same trajectory over long periods of time. Again, Walmart is a huge company, and it's just going to take time for these numbers to shake out. Shares outstanding. This is wonderful. Something I'm really happy about is Walmart is buying back their shares. Thanks. Appreciate that. That's actually where a lot of value can come from in a company that isn't growing. If a company was willing to buy back its shares and reward its investors, then there you go. You're getting your money's worth out of your investment, even though the company remains relatively stagnant with its revenue and other cash numbers. So your EPS and your free cash flow per share is looking a lot better than the underlying numbers, simply because the buybacks are so stellar. They're so high. So whereas your net income, the metric I use for earnings, you're looking at minus 2%, whereas your earnings per share are only down 0.3% a year. Free cash flow, minus 1.4% a year, whereas free cash flow per share is growing at 0.47% a year. This is where the value comes from. This is why I point this out in every single stock that I look at, is that these shares make a big difference. Now, moving on to assets. Walmart has a lot of assets. They have a lot of debt. Not a lot of cash. Which means when you take the total debt minus the cash, you get your net debt, which is pretty high. And compared to free cash flow, you're looking at a pretty big ratio here. And with cash flow that isn't growing, that's a bit of a problem. Debt seems a little high, but it's Walmart. I feel like I could give it a pass. I don't think Walmart's going to go bankrupt, guys. I hate to break it to everybody, but the world's largest retailer isn't going to go under tomorrow. Nah, not going to happen. One thing I skipped over here was the dividends. I really need to move those over another column over to here. Make more sense with the flow. I don't know why I put it there. Anyway, dividend. Walmart's been steadily growing its dividend. Right here, I don't know why we saw that big of a drop. Maybe a split or something. I don't know why that number is so strange. But since then, Walmart has been steadily growing its dividend. I don't see why Walmart would not continue to grow its dividend. I think it would be fine. I'm interested to see what its payout ratio is. I haven't looked at that one. Walmart is probably paying out most of their free cash flow in dividends, if I had to guess. ROIC, good. I mean, it's here it was awesome. Here it's like, meh. But it's Walmart. I mean, it's Walmart. Come on. Here's some metrics. Our pricing metrics are seeming to indicate that it's overpriced. Based on the 20-year free cash flow, meh, it's okay. Debt, a little high, but I'd give that a pass. It's Walmart. Revenue and earnings growth over the past 5 years, positive. Free cash flow growth over the past 5 years is negative. Not great. Shares outstanding coming down, good. And ROIC is above 9%, but just barely. Not real happy with that one. But again, it's Walmart. I feel like I've said that way too many times during this video, but you got to give Walmart some credit because it is, one of the biggest companies in the world. I think it's the biggest one by revenue in the world, if I'm not mistaken. I think it still is. So I'm going to be a bit generous here with 3% growth rates on free cash flow and the net income. And I'm also being generous on the PE ratios simply because, guess what? It's Walmart. Such a huge, solid, safe company. I feel like you need to pay a premium for it, for that safety. And I am being a bit generous on this one. If I was going to be conservative, I would basically say it was going to be flat for the next 10 years. But I'm being generous simply because I think it's a good company to invest in during recessions. I think it's more of a recession play versus a growth play. I think when you're looking at the market going into recession, you're trying to pick out companies that are going to do well during recessions. Walmart is one of those companies that is going to do well during recession. You're looking at those companies focused on, saving people money. I mean, you're essentially looking at, Dollar Tree, Dollar General, Walmart, Costco, those sort of companies, and they do well during recession. But so I'm being generous here. Moving on, price per share 118, 10 years, average of those two is 120.46. So you're not seeing a big difference between those two prices, and that really shakes out in our IRR calculation. Minus, you're in at 120, call it. You're out at 120, let's call it. You get these cash flows along the way, and you're only getting a 5% return. So, my thoughts on that. That's a low return. That's not what I'm looking for. However, I think if you want a company that is safe and that it's going to do well and perform well over a recessionary period, I think Walmart is one of those companies that you should be looking into. Again, this is not a growth play. It's not something that you're going to see massive value delivered to you from the standpoint of revenue growth, earnings growth, free cash flow growth. You're not going to see that. I mean, this is more of one of those stocks where you get those dividend checks once a quarter, and they buy back some shares to, to boost your growth, your price appreciation. Beyond that, I don't think you're going to see a whole lot happening. I think the big thing is seeing money flow into this company during a recessionary period and causing the stock price to go up during that recessionary period. And I think the revenue and free cash flow and such will go up during a recessionary period simply because more people will be looking for cheap things to buy. So I think Walmart is definitely a recession play. It's not one I'm particularly interested in, simply because I'm not looking to move my money around based on the current economic climate. I'm investing over the long term. What happens over the next few years is not really my concern. Something that's going to happen over the next 20, 30 years, yeah, maybe, yeah, that's something I need to worry about. But one recession, no, I'm not going to worry about it. But those of you who are out there looking for recession plays, something you can do during a recession, a down market, a bear market, Walmart, I think, is one of those good options. But anyway, that's my thoughts on that. I'm going to stop rambling here, and I'm going to stop the video. I will catch you guys in the next one.